This program is brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. IG, where traders are made.
Stock of the day, I thought we'd take a look at Commonwealth Bank for weeks, for months. A consensus of opinion here on the call, on our panels, has been sell Commonwealth Bank. Its share price cannot be maintained at these levels. This is as good as it's going to get for the Commonwealth Bank. But this morning, they hit another record high, despite short sellers recently noticing the bank and they will cease to be substantial shareholders. So it comes on the back of a strong rise of all the major banks. I saw Macquarie Bank back up to $200 today. CBA share price was at $97, $93 a year ago, compared to around $128 at the close yesterday. Many short sellers seem to think this run is coming to an end, but Australia's largest bank stock seems to be just holding on. Let's take a look at the share price at the moment. Up again today, not by a bit over $1, $128.10. Mark Moreland, why is the Commonwealth Bank continuing to break records? We've got
well, they're not doing anything. It's
No,
the market.
They haven't done anything different, have they?
They haven't done anything for ages. They're just doing the same thing. They're probably wondering the same thing. They're probably sitting around the board going, "Can you believe where our share price is?"
We should start
how's that
selling ourselves.
justified?
Well, they're probably doing less because they've all got rid of their wealth management divisions
That's right.
too.
That's
so
right. Exactly right. So if you look at their earnings growth, it's averaged 4.7% a year for the last 6 years with pretty good
4.7.
stability. Yeah, well, it's like inflation.
Right.
There's nothing.
No.
Yeah.
There's no growth. It's flat. So and that's okay. Pays a 3% dividend. Well, that's not very exciting. Also below inflation, obviously frank. But look, I would have to agree with the sell brigade. It's so overvalued. It's on a current PE, trailing PE of 22, which is the very, very top. I think it's the highest it's ever been.
Wow.
Has it ever been higher than that, Francesco? Do you know?
What, the stock?
22 PE? I don't think it ever has.
I haven't seen it higher than that, but it could surprise
In
me.
fact, I can tell you. I'll have a quick look. Anyway, point is, it's the PE doesn't justify. It's not justified by the earnings growth. And if you look at the prospects for the bank going forward, they're okay. I mean, the bank's not going anywhere, but I can't see anything changing that you'd be saying, well, yes, I should stay invested in if I'm invested in it, or I should buy it because the earnings are going to lift massively and it'll be really good. There's nothing.
Because it's basically like a super duper credit union at the moment.
That's right.
It's a home loan book.
Credit union,
Just
absolutely. Yeah.
Is it?
Building society, we used to call it.
Building
Remember
society,
that?
yeah.
Savings and Lendings Bank.
Yeah. So look, it is. We're showing the returns. This is the way we look at it. So totally objective. We say CBA. What are you going to get if you buy it today? Now there's a difference between buying it today and owning it already. If you bought it in the float, and I've got members who did that. I've got members that have got big amounts of CBA. They're not selling because they don't want to pay big tax bill and all the rest of it. And look, that's a way of looking at it. The other way of looking at it is the opportunity cost. And so, well, from where we are now is the reality. Would I buy it? No chance. Would I hold it? Maybe if I'd had it for a long time, there's a big tax bill, maybe. I wouldn't. I would sell it.
Okay.
And anyway, return, I was going to give you the return. Here you go. Our default return, which is the most likely best fit, it's 2.9% a year for the next 5 years.
Right.
And the margin of safety is negative 5.7.
Okay.
And for me, I don't invest in anything unless I can get about a 10% on margin of safety.
Okay. So is it sort of weighted money?
It could be. It could be. Maybe it's the ETFs and all the super money coming in, perhaps. There's also, the market's pretty expensive. So maybe what it is a lot of people are going, well, I've got money, what do I do with it? I'll buy some CBA, that's safe. Maybe it's feels like a safe place to put your money, perhaps.
Yeah. $98 to $128 in a year, that's sort of...
I'd take it.
Yeah.
I'd say thank you.
Yeah. We're negative.
Francesco?
And I think you'd probably find consensus across the market is negative. I was even reading some articles, and you mentioned just before, that there are some short sellers out there, which I can't disagree with. Mark's point about, this is the highest PE we've seen on it. We got 22.3 times for next year. And I think back to the GFC, you know, where we had the PE ratio on the banks was under 10 times and the dividend yield was over 10%.
Right.
Now we're looking at a PE of 23 times and a dividend yield of 3.5%. So
I've only got 10 years data and hasn't.
Yeah,
Before that, the highest was 18.6
right. Well, the irony of all that is that
last year.
if you rang a client today and they're a retail client, you said, "Oh, let's buy some CBA," they'd probably go ahead and buy it at these levels.
Yeah.
Not that I would, but
Yeah.
Sure.
during the GFC, when you're ringing them and saying, "Listen, the banks are just cheap," they wouldn't touch them. So you know, it's a bit of fear factor as well, a bit of emotion involved in all of that. Look, to Mark's point, I agree. You know, I wouldn't be buying it at these levels, and as a matter of fact, all the banks are pretty expensive relative to their long-term averages. So it's hard to buy into the banks unless you go look at regionals, and you might sort of pick up something. Bank of Queensland is probably a favourite on the regional side of things, but even that's hard. But even those people that have had large holdings for a long time, I'm happy to sort of talk to them about reducing.
Right.
You know, look at their tax situation. Have they got any tax losses from this year? Sell a bit of your Commonwealth Bank. Take some of that off the table, because your Commonwealth Bank holding, and we see it all the time, is a very large part of their portfolio at a retail level. And you know, if something happens to CBA tomorrow and it falls 20%, their whole portfolio falls by almost 20% as well. So take a bit off the table, I say.
Okay. All right. But get your own advice for tax situations and things like that.
Of course.
But, Mark's made a really good point. The opportunity cost of the next 12 months, where you could do a whole lot better on your stocks. All right. That's our stock of the day. Commonwealth Bank.
This program was brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended hours on key US shares and competitive spreads. All on an award-winning platform. IG, where traders are made.